Everybody, it is Brian Shannon from alphatrends.net. It's Monday, the 3rd of May, 2010. Let's take a look at these markets after the close here. The S&P 500, as we know, has been approaching this two-thirds retracement level of the 2007 highs to the 2009 lows, and that's also the area of prior support where we'd experienced a large breakdown from in 2008. So in this general area, it's a widely watched level and where we might expect to encounter some resistance. Now, last week, we saw that the market was down on very heavy volume. And when we look closer at the action on a daily time frame, you can see that these red candles came on heavy volume. The red candles, a red candle, you can actually have a positive day, that is an up day in the market, but the candle will be red if prices close below where they opened. However, in all three of these cases where we had that large volume, they were negative days. So the market has been undergoing really what looks like distribution potentially up here. Now, it's important to note that volume, but it's not a reason to act. Maybe you want to take a little bit of your long exposure off based on that, but until prices really break down through support, and right now the most relevant area of support remains about 118.50. That's the level we observed last week, and we continue to hold above that 118.50 level. So until we break down below it, and we've been stuck in this range, really 118.50 to 121.50. We have a little bit of resistance in here recently at about 121.10 as well, but we've been crossing back and forth above and below that 120 area with a lot of regularity every 2 to 3 days here, basically. So the market's gone pretty neutral. So what that tells me right now, with a primary uptrend and a rising 50-day moving average, is that this market seems to be correcting more through time than price, but we have to be aware of some of the troubling signs, such as the heavy volume. Other people are calling this a megaphone pattern that is potentially bearish. It's good to be aware of things like that, but it's not a reason to act. Only price pays. The volume doesn't pay. The stochastics doesn't pay. The moving averages don't pay. And if we get a breakdown below that 118.50, I'm not expecting a huge breakdown. I think that the 50-day moving average becomes a target. Right now that's at 117, and that's a moving number, of course. And also we would look at the January highs near about 115 at 115 and 30 cents. Now, over the weekend I had written an article about gold and the S&P 500. I said that gold looks like it's probably the GLD, that is, looks like it's probably headed for about 125 based on this inverted head and shoulders pattern that it's recently broken past. And we take the approximate height of that, which would be 103 to 114. That's 11 points. So we add that 11 points to the breakout area of 114, and that will give us an upward objective of about $125 in GLD, which is GLD is the ETF which mimics the price of gold, supposed to trade approximately equal to one tenth of the price of the ounce of gold. So we were at new highs for the year in the gold. Once we clear these levels from late last year, then it'll be up at all-time highs. And I think that if you're looking at GLD as a longer-term play, that maybe your stop goes just below that 112 area or so. So it still looks good. The gold stocks themselves, GDX, started to pull back today, so that's a good thing. They're holding right on a rising 5-day moving average. I wouldn't buy them yet. I'd definitely keep an eye on the GDX, which is the gold mining ETF, and some of the leading stocks such as Agnico Eagle, which had broken past some resistance late last week, and that's something that subscribers to Alpha Trends had been involved with. But it's pulling back on light volume, so you want to look at this resistance potentially acting as support above those rising moving averages. American Barrick Gold also looks bullish on a daily and a weekly time frame, as does Newmont Mining. So these are some of the bigger names. Here's a weekly of Newmont, there's the monthly of Newmont, and here's the daily. You can see it broke some resistance, that resistance holding support. So be aware of the larger volatility could signal that the market, the S&P 500, could be ready to turn, but I don't think that it's going to be anything significant. But if prices break down, that's what you have to listen to. Listen to the message of the market, and only price pays.